Hello, Bitcoin is still consolidating and I am currently tracking two different scenarios, one bullish and one bearish. So the bullish scenario is as follows: wave 1, 2, 3, 4, 5 in a leading contracting diagonal for a wave 1, and then ABC, W, X, Y, wave 2, and then 3, 4, 5 and so on, looking for way higher prices. And the bearish scenario is this. So you can count this a little bit differently, but you end up in the same place. So W, X, Y. Here afterwards, you have the 1, 2, 3, 4, 5 in a wave 1, and then 2, and then 1 of a lower degree, 2, 3, 4, 5, 4, 5, and so on, looking for way lower prices. The probabilities for these, the leading contracting diagonal is a very low probability structure in itself. It has a higher probability that it is a corrective structure than a leading diagonal. But nonetheless, they do occur, so it's very important to have it mapped out. So here is the wave 1, and then ABC here, and I have written a W here. And the reason is because this wave, this mess, you can say, it's very difficult to count this impulsively, meaning it has a higher probability of being a wave X. And if it has a higher probability of being a wave X, then it's a higher probability of having a wave Y afterwards. And this is very important to keep in mind as well for the bulls, that 72526.30. If we hit this line with wave X, it has a higher probability that wave Y is a flat or a triangle like this, and afterwards we are moving up. And the bulls also here is the prime target for a leading diagonal. It is very deep, but it is not as deep as taking out this line here at 71616.93, because if we take out this, here is where the probabilities change in favor for the bears. So bulls do not want to take out this line. It is fine to reach this target even further, but not reaching this line, because that's where the bears have the higher probability. And this is the invalidation for the bulls, of course, because that breaks the rules. So yeah, if we move on here to the bearish scenario, the 1, 2, 3, 4, 5 in a way 1, 2, and then 1, 2, 3 of a lower degree. Here, it is a lower probability wave 2 target, meaning that if we move up with wave 2 here and break this, it has a higher probability that we have a wave 1 here, and that this is a WXY. So that is very important to keep in mind. And also, if we hit this low probability wave 2 target, 74974.42, this is referring to this wave 2, so 1, 2 over there. And here is where the probabilities change in favor for the bulls instead. So the bears do not want to take out this line. So, and this is the invalidation, of course, on this bearish scenario. So that is extremely important, and where Elliott waves are so powerful, to know where the probabilities change. It's not 100% when we get here, but it's a very, very high probability for the bulls if we get there. And the same goes for the bears in the other scenarios, of course. So yeah, I hope this was helpful to you. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.